take stock of what you've seen through the Asia session. I mean, we are at a 3-week high for some of these Asian markets, or for the Asian equity markets as a whole. We can ask lots of difficult questions about how long this lasts, but at this very moment, risk assets are being bought.
Yeah, good morning. That's the setup, and it all hinges on the cost of energy, right? So we've seen the big declines in crude oil, WTI, the largest drop since the COVID era. And natural gas prices falling as well after this ceasefire agreement, the hope being that energy will be able to flow back into the global economy and relieve some of those pinch points that we'd seen emerging in recent weeks. So that does a number of things. I think, first of all, it boosts risk appetite in general, but it also lowers costs in the economy. So that's favorable for the equities market. So that's why you see gains there. It also reduces the inflationary impact in the economy. And so that's good news for bond markets. So perhaps a little bit counterintuitively, they're also having a big day. People taking away bets that central banks might hike, and putting back on a little bit of a hint that the Federal Reserve, for example, may actually ease monetary policy later in the year. A couple of other interesting nuggets for you as well. So we've got a much weaker dollar. The dollar had been a haven through this so far. We've got emerging market currencies performing strongly. We've got in credit markets a couple of interesting things. Some new issuers coming to market suggest that maybe they're seeing this as a window of opportunity as spreads tighten again to get some deals away. And Pakistan, the standout gauge in Asia's markets, they of course played a role as an intermediary in the talks, and their market is getting the benefits from that.
Paul, what do I need to sustain the faith?
Yeah, I think two things that are very important: to see that the ceasefire actually holds and that the missiles stop flying, and two, that we start to get some shipments coming out of the Straits of Hormuz. There's 800 or so laden cargoes waiting to get out through that channel, which can do more than 100 a day in good conditions. I think that the market really needs to see that flowing pretty quickly in order to realize the assumptions that have been made in the market so far and justify the price moves that we've seen.
Paul, incredible moves in bond markets. I know we've seen some of that in Asia, but certainly here in Europe, you described maybe a little counterintuitively, but this could flow into equities as well.
Yeah. So I think that what we saw in Asia with the RBNZ is a little bit of a hawkish hold there. But what they're saying is, if we see second round inflationary impacts, then we might need to hike interest rates. Otherwise, we might hold off. And so that's what the market is starting to price in more broadly with energy prices coming down again.